In this video, I'm going to show you how to refinance your mortgage like a pro. This is Dawn Connors at Mortgage One. All right, what is a refinance? A refinance is rewriting the terms of your loan and you're resetting yourself. It could be for the better or for the worse. So you can improve your interest rate. You could also take out cash potentially in your refinance and have an interest rate increase. You can also change your term. You can go from a 30-year to a 20 or 15-year. You could also go from a 15 or 20 back to a 30-year. So you have options. There's also loans called Pick Your Term, where you can choose in conventional financing to choose a 28-year loan or a 24-year loan so that you don't lose life of your loan in refinancing back to 30 years. So, number one is to consider the term that you want to have for your mortgage. Are you okay with, if you pay down your loan for the last 2 years, are you okay with going back to 30 years, or do you want to just look at 28 years or lower? And then the second thing is determining who you're going to get your quotes from, who you're going to work with. My one recommendation is this: get a couple different quotes, go back to your original lender who wrote the loan for you if they provided you with great service and really did a good job, because they might be able to provide you with lower closing costs. Maybe they'll be able to give you a free refinance offering or half closing costs. That's what I'm doing for my current clients refinancing now. And then the other thing is you'll want to look at maybe comparing with another loan estimate with another company, maybe who your current servicer is, or through a recommendation of your real estate agent to see who they recommend for that second quote. And then number three is you'll have closing costs. Know that you'll have closing costs. You're going to have to decide if you want those closing costs rolled into your loan, because typically on the approval process, you will have an application. Typically you have an appraisal, unless you have a government loan and you can do what's called a streamlined refinance, which means you don't need an appraisal. So in some cases you won't need an appraisal. Ask your lender about that. Will I need an appraisal to refinance? In what cases do I not? And then they will do a credit check and then collect some documents. So it's a lot less stressful than buying a home, because there's not the timeline of a contract, and you can take your time and watch for rates to come down to the levels that you're looking for before locking in your rate. You can choose to lock your rate in right away, or you can choose to float the rate and wait for rates to see if they come up or down and what happens next. And it's a pretty exciting time in the mortgage business right now. We've been waiting for about 3 years for these interest rates to come down, and they're here. So they're here, almost here, coming here soon. And so it's just all really great. And so make sure you go with a trusted lender that is going to make sure that they get you a really good deal and help you, because you don't want to reset yourself and go back to 30 years and end up paying more money in interest and fees and have high closing costs. So those are all things you want to kind of keep a tab on as you consider refinancing. And the last thing is you can consider doing a cash out refinance. Usually if you've owned your home for about 4 years or longer and you need some equity out of your house in order to pay down credit cards or to consolidate some debt. In doing so, make sure that you can afford the new mortgage payment with the taxes and insurance, that it's affordable for you, and that the cash out that you take, let's say $30,000 or $40,000, that it's going for a good cause, that you're actually doing the projects or the debt consolidation that you wanted to do, and you're spending that money wisely. And finally, those closing costs that you're going to pay. They can be rolled into the loan using the home's equity. Because we'll do a new appraisal, a lot of times the equity has increased, or the value of your home has increased, giving you more equity in your home, which allows you to roll in those closing costs. So maybe ask both ways. What if I bring a payment to closing? What if I bring those closing costs to closing? What will that do for my payment? Will it lower the interest rate? What are my options within that? All right, awesome. This is Dawn Connors at Mortgage One. If you call me and you have me do a refinance consultation with you, we'll spend about 30 minutes together. I'll need your mortgage statement and your current homeowner's insurance, and we'll look at various options: reducing term, increasing term, reducing rate, and seeing what is the best avenue for you. And then I'll calculate what's called your break-even point. You're given your closing cost and your savings. How long will it take you to break even on this refinancing? Okay, this is Dawn Connors at Mortgage One, providing you fantastic mortgage solutions.